Welcome to the Northbound Wealth Podcast. All opinions expressed by me, my co-hosts, or my guests are solely our own opinions and do not reflect the opinions of Northbound Wealth Management. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast. Hello, everybody. Today is February 3rd, 2025. This is your host of the Northbound Wealth Podcast, Brent Foster. Black Swan casts shadow over Wall Street. So stocks were mixed last week as investors parsed market-moving news nearly every trading day. From an unsettling AI update to White House news to Q4 corporate reports, the S&P 500 fell 1%. The S&P 500 closed Friday session at 6,040, spot 53, while this marks a decline from a week ago. The index is still near its record high of 6,128, spot 18, reached last Friday. It is also up 2.7% from the end of 2024 and up 25% from a year ago, while the NASDAQ Composite Index slid 1.64%. Meanwhile, the Dow Jones Industrial Average rose, picking up 0.27%. The MSCI EAFE Index, which tracks developed overseas stock markets, added 0.75%. So it's a choppy end to January. The week started on a down note with news that a Chinese artificial intelligence company, startup, they made a breakthrough, which put pressure on a wide range of tech stocks. The tech-heavy NASDAQ fell 3% for the day, but the Dow Jones Industrial ended the trading session slightly higher. Stocks were under pressure again midweek as investors waited on news from the Federal Reserve. The Fed voted to hold firm on short-term interest rates, even though the decision was widely expected. Markets were under pressure again after Wednesday's afternoon announcement. Stocks rallied Thursday, but reversed course Friday afternoon as traders adopted a more risk-averse position going into the weekend. There was a bit of anxiety knowing that the administration's tariffs on Mexico and Canada were scheduled to take effect on Saturday. Interestingly, it was the Dow Industrial's fourth straight week outperforming both the S&P and the NASDAQ. So, year to date, the Dow is up 5.58%, MSCI EAFE Index is up 5.41%, NASDAQ's up 1.94%, and the S&P is up 3.30%. 10-year Treasury notes trading at 4.58%. Thank you, Y Charts, for that data. So it's hard to overstate how much markets were caught off guard by Monday's news related to the success of a new AI startup called DeepSeek, based out of China. What unsettled investors was the company's claim it developed a competitive AI model that performs as well as Western counterparts like OpenAI at a fraction of the cost. As the week progressed, markets started to process the news and began to evaluate whether it was truly a black swan event or just another development in the fast-moving world of AI. So I think it's going to make America's technology better due to competition. I think it's just another development where the U.S. tech sector, along with other industries, can demonstrate dominance through innovation, scale, application, and profitability. But the AI boom isn't going to be given to us. We have to work hard to stay ahead of China and the rest of the world. The market received quarterly earnings reports from a number of companies this week, with many surpassing analysts' mean estimates, including Apple and Visa. Also, the Federal Reserve's preferred inflation measure, the PCE price index, met expectations with a 0.3% increase for December. On Wednesday, the central bank's FOMC meeting maintained the range of its policy rate at 4.25% to 4.5% as expected, but made its changes to its statement that showed inflation remains elevated while removing an acknowledgement of progress. Nevertheless, investors are nervous about how inflation may be impacted by the Trump administration's planned tariffs. On Friday, White House Press Secretary Caroline Leavitt said President Donald Trump will begin implementing a 25% tariff on Mexico and Canada and a 10% tariff on China on Saturday. Worries also ramped up over how well the U.S. technology sector will be able to compete in the artificial intelligence space amid the entry of the new AI model from DeepSeek. The technology sector had the largest percentage drop in the S&P 500 this week, falling 4.6%, followed by a 3.8% decline in energy and a 2.1% loss in utilities and industrials. Real estate and materials also posted weekly declines. NVIDIA was hit the hardest in the technology sector, falling 16% on the week amid investors' worries over competition from DeepSeek. Now, I do want to make a comment about some of the things that have come out after that, and I've got an opinion about it. I think that Apple, NVIDIA, and a lot of the higher competition chip names are going to do a great job. I think that the attribution is going to favor the United States as competition ramps up, and we're going to become more innovative, and we're going to have this all at less cost. I know that Meta and Google and Alphabet and the rest of them are all scrambling, trying to figure out where this all happened, and I think it's going to be a good thing to have competition. We're going to emerge from this even better and in the lead. However, on the upside, let's see. So in the energy sector, shares of ONEC fell 7% as the company said it completed its acquisition with Enleak Midstream. On the upside, communication services rose 2.7%, followed by a 1.9% advance in consumer staples, a 1.7% increase in healthcare. Financials and consumer discretionary also edged higher. T-Mobile had the largest percentage gain in communication services, climbing 6.6% on the week, on better than expected fourth quarter results, aided by post-paid phone subscriber additions that came in ahead of Wall Street's projections. Meta Platform shares also gave a big boost to communication services, rising 6.4%, as the Facebook parent reported Q4 earnings and revenue above year earlier results and analyst estimates. Gainers in consumer staples included shares of Kroger, up 5%, and Costco, up 4.3%. In healthcare, AbbVie shares jumped 8%. The company reported better than expected fourth quarter results amid robust sales of its Xyrizi and Rinvoq drugs, prompting the drug maker to lift its long-term combined revenue outlook for the two immunology drugs. This week, key economic data: Monday, ISM manufacturing construction spending; Tuesday, motor vehicle sales; Wednesday, ADP employment report; factory orders, ISM services index, beige book; Thursday, jobless claims; international trade in goods and services, productivity and costs; and Friday, the employment situation report. Thank you, Investor Business Daily, for that insight. And then notable companies reporting earnings this week: Monday, Palantir, which is an AI play; Tuesday, Alphabet; Merck, Pepsi, Advanced Micro Devices; Pfizer, Amgen, KKR, and Spotify. On Wednesday, the Walt Disney Company, Qualcomm, Boston Scientific, and Uber, and Fiserv. Thursday, Amazon, Eli Lilly, Philip Morris, Honeywell, Bristol Myers Squibb, and ConocoPhillips. Tax tip of the week. So be on the lookout for unemployment identity theft scams. With millions of people receiving unemployment, it's no surprise that scammers are taking advantage of the situation and filing fraudulent claims for unemployment compensation. They do this by using stolen personal information of taxpayers who haven't filed unemployment claims. If you filed for unemployment and received an incorrect Form 1099-G, contact the issuing agency to request a revised form. When filing your federal tax return, you can also contact the IRS and request an identity protection pin to protect your identity. Educate yourself on many of the signs of identity theft and take the proper steps to protect yourself. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. Stay tuned for the next segment. Did you know that as of May 2023, there were over 29 million forgotten retirement accounts in the U.S., holding nearly $1.65 trillion in assets? You guys, you got to check your 401ks and retirement assets. The situation is more common than you might think. According to the Bureau of Labor Statistics, baby boomers born between 1957 and 1964 held an average of 12.4 jobs before the age of 54. The first 401k program was implemented in 1981. I was born in 82. By the year 2000, more than 3/4 of American workers were participating in a 401k. With multiple jobs comes multiple retirement accounts, making it easier for some to get lost along the way. If accounts are left unattended for a period of time, they can be transferred to the state as unclaimed property. Unclaimed property. So, here are some steps that may help you locate your missing accounts. Number one, start with previous employers. So, contact former employers, human resource departments, or financial institutions that manage your accounts. They might be able to help you access information on them. Number two, use online resources. So, several databases can help you locate missing accounts. National Registry of Unclaimed Retirement Benefits, Department of Labor's Abandoned Plan Database, Free ERISA, U.S. Pension Guarantee Corp database, and missingmoney.com. Number three, check state resources. Your state's unclaimed property database might help locate funds that were turned over to the state agencies. Number four, contact federal resources. So the U.S. Department of Labor Employee Benefit Services Administration, or EBSA, has dedicated professionals who can help assist in locating retirement accounts from previous employers. In conclusion, a new searchable database from the Department of Labor is on the way to help individuals locate lost retirement accounts. Thanks to the Secure Act 2.0, this tool is being designed to make it easier than ever to reconnect with any missing assets. If you or anyone you know has questions about potentially missing retirement accounts, please don't hesitate to contact us at Northbound Wealth Management. You can reach us at info@northboundwealth.com or 317-399-1107. So, be on the lookout for criminals filing tax returns in your name. So, the IRS. Here's a scary fact, you guys. The Federal Trade Commission, or the FTC, reported that individuals lost over $10 billion to fraud in 2023, a 14% increase from the previous year, with over 2.6 million consumers falling victim. Furthermore, headline-making data breaches have made the issue even more pressing by exposing millions of taxpayer identification numbers. How criminals operate. Tax scammers use various tactics, including filing false returns using stolen Social Security numbers, impersonating IRS officials, making aggressive threats about arrest or legal action, suspending suspicious links or phishing emails, demanding payment through its gift cards. So, know how the IRS works. The IRS follows specific procedures when contacting taxpayers. They typically initiate contact through U.S. mail, not email or phone. They won't email without prior consent. They don't send direct messages on social media, and they rarely make phone calls without sending written notice first. In-person visits are limited and include official credentials. 5 steps to protect yourself. Number 1, take IRS notices seriously and verify their legitimacy. Number 2, be cautious of emails or calls claiming to be from the IRS. Number 3, monitor your financial accounts regularly. Number 4, use strong passwords and multi-factor authentication, or auth. I always have a hard time saying that. Number 5, check your IRS transcript history for unauthorized activity. If you're targeted, act quickly. If you suspect tax return fraud, do the following. Contact the IRS Identity Theft Hotline at 1-800-908-4490. That's 1-800-908-4490. File Form 14039 or 14039, Identity Theft Affidavit. Place a fraud alert with the credit bureaus and work with your tax professional, or consider contacting us. We might be able to help offer some guidance and support. We provided this email update for information purposes only, to remind everyone that it's not a replacement for real life advice. If you are concerned with your tax filing and if it's been compromised or fear that it could be in the future, we encourage you to consult with your tax, legal, or accounting professionals about specific steps you can take to proactively manage your situation. For more information, consider visiting the IRS tax scams page, and they have a website for that, and I put it out there on the blog and email, so you can check that out. If you need help, reach out to Northbound Wealth Management, 317-399-1107, or info@northboundwealth.com. Here's a surprising 2024 fact. The U.S. Department of Education found that 85% of college students receive financial aid, yet countless families leave money on the table. This Financial Aid Awareness Month, here are critical insights that could save you thousands. Number one, file early. Make sure you check deadlines for your state as they may vary, but file early. Aid is first come, first served. Two, don't count yourself out. Income matters, but so does your family size and other factors. Many who think they won't qualify actually do. Three, file an appeal. If life changes, so can your aid. Families have secured thousands more by simply asking. And four, think beyond FAFSA. State programs plus private scholarships don't leave money on the table. Start your financial aid journey well before the senior year of high school. The earlier you understand your choices, the better position you'll be to prepare for college expenses. What's your biggest financial aid question? Drop it in the social below on LinkedIn. You can check that out. Northboundwealth.com. Did you know that Social Security death benefit has remained at $255 since 1954, despite increases in funeral costs over the decades? However, the Social Security Survivor Benefits Equity Act proposes raising the one-time payment to $2,900 starting in 2025, with annual inflation adjustments thereafter. The bill is currently under consideration in Congress and may be considered again at a later date. One important reminder, eligible spouses or children must apply to receive this benefit. It isn't automatic. If you have questions about Social Security benefits or preparing for unexpected expenses, you can always connect at www.northboundwealth.com or getting in touch, 317-399-1107. Hey, it's Happy Groundhog Day. Just like Puxatani Phil, we can benefit from periodically poking our heads out of our routines and assumptions to get a fresh perspective. In our financial lives, seeing our shadow is about identifying areas where we might need to adjust. It's an opportunity to reassess and reevaluate whether our strategies are aligned with the seasons of life we're navigating. Are your finances ready for the upcoming seasons? If it's been a while since you've revisited your financial strategy, now might be a perfect time to see if you're well prepared for whatever comes next. So, happy Groundhog's Day. Can you guess 5 big financial mistakes Gen Z appears to be making? As this generation steps into financial independence, some trends are emerging that highlight potential blind spots in building wealth. As financial professionals, it is our job to stay aware of these habits. We thought sharing these might be of interest. Skipping the budget. So small expenses such as coffee runs, food deliveries, ride sharing, and streamed subscriptions add up quickly. Taking on debt without a clear strategy. So balancing student loans and credit card debt can be challenging without a solid approach. So make sure you make a plan. Missing out on employer match contributions. That's free money you're missing out on. So employer matching is essentially free money, you guys. A valuable opportunity that some are leaving on the table. Leaning heavily on social media for financial guidance. So not every finfluencer has sound or personalized insights, and financial strategies aren't always one size fit all or cookie cutter. So try to talk to someone specifically about your situation. Playing it too safely. So while avoiding investments can seem like the best approach, that may be a risk in and of itself. Without a financial strategy, you may miss out on long-term growth opportunities. So keep that in mind as interest rates come down and your savings account doesn't pay as much because you got to keep pace with inflation. These mistakes offer a glimpse into the financial challenges facing the next generation. What are your thoughts? We're always interested in hearing different perspectives. You can reach out to us at 317-399-1107 or check us out on the website, send us a note. Also, as a reminder, you can check out the Northbound Wealth Podcast by going to Apple, Spotify, YouTube, anywhere you listen. One of the last episodes I posted was on Wednesday, January 29th. It is the State of the Markets presentation. I highly recommend you check it out. I talk about what happened in 2024 and then go over what's going on in 2025. You can check that on in YouTube specifically, where I have a video and a kind of a webinar setup for you guys to listen to. So go to the Northbound Wealth channel and check out the State of the Markets podcast and video release. With that, I'm going to wrap up. have a great week. Have a great weekend. And we'll talk to you next week on the Northbound Wealth Podcast. Thanks for listening.